Hello, I'm Robert, and welcome to my channel, where I talk about everything automated algorithmic trading, or simply algo trading. Today I'm going to talk about my grid trading technique, and the things I've learned over the last 4 years of jumping down this rabbit hole. What we are looking at on the screen is the most recent experiment I have started, where I've actually showing my trades as they've taken place. This chart is very interesting because it shows the trades, shows the direction of the market, and how long I held each trade. And right now it only shows where I had one loss by slippage, but it would normally show reductions and stop losses as well as it grows. Now this is a very simple experiment, and it's even done quite generous, comparatively speaking, for the actual profitability of the market itself. As we can see, my profits started at zero, and now I am roughly around $5 in profit just for the short time this bot has been running. It is an interesting situation, and it also highlights one of the most dangerous components of grid trading in general. Grid trading is a wonderful technique for risk mitigation and budget management, if and only if you take the time to set it up properly. Now, in all truthfulness, any trading technique can be a winner or a loser with the right setup and risk mitigation approach. It's not hard to pick a winner, but it is hard to pick a winner that makes a good level of profitability consistently. So let's get into the VPS and actually show that. Okay, here we are in the VPS where all of my demo accounts are running. That's right, I said demo accounts. This is critical to my success for my live account, because I can test different scenarios and see how well they will react before risking real money. This was the really first biggest learning mistake I made when I started trading. I didn't appreciate the demo account enough, and I didn't spend enough time using it. I can't emphasize this enough. Before you ever put real money into the account or actually risk it, test different scenarios and test them again and again and again. I have 4 different demo accounts running different assets, testing different ideologies of my trading to see which ones will produce winners and losers. And that really is the whole point. I have a large amount of data that I've collected, and that's just within the last couple of months. If I was to take a look at all of the data that I've collected over 4 years, I would blow my VPS up because I just don't have the space for it. But that's the learning experience that I have gained from this rabbit hole. When I first started learning to trade, I knew nothing at all about technical analysis, accumulation, grid trading, nothing. So I needed something that I would be able to manage and learn and minimize my risks. And that turned out to be a rabbit hole I never expected to be as deep as it's become. Because in the process of developing my own grid trading technique, I learned why so many people deliberately teach the wrong methodologies. I also learned how different exchanges manipulate the market or manipulate their own platform to try to make sure grid trading fails. And in the process of my personal trading, I've made a lot of mistakes along the way. And one of the worst mistakes that I've personally dealt with is not realizing when I was being too greedy. And it has decimated my real money account more than once. For example, one time I put $300 in, set up the grid, and within a week, 5 days, I made another $300. I was tickled pink at how well it worked. The second week, I lost $450. The end of that 2 weeks, I went from a total balance of $300 down to $150. I had wiped out half of my account because I was too greedy. That has been the biggest lesson I have learned about grid trading. All of the various platforms and stuff that you will find commonly talking about grid trading talk about a lower boundary and an upper boundary. Works great if you're the 1% lucky enough to get in the market at the right time. But if you're the average Joe like me, it doesn't work and you find yourself wiped out. And that's exactly what happened to me, time and time again. I lost money because I didn't plan for the one thing that is absolutely critical to the success of grid trading. Every grid trading technique on the market, except what I talk about in all my videos, and I'm the only one who's actually, I have seen only this from my videos versus other people talking about grid trading. And that is, if you want your grid trading to succeed, it has to move with the market. Any grid trading technique that has a lower boundary and an upper boundary, or either one, in other words, any fixed point that cannot move with the market, is going to lose in the long term, and quite possibly the short term. Your whole grid must move with the market. It took me 2 years of studying the market to realize why most grid trading techniques fail. And that is, most of them fail because they don't give enough room for the market to fluctuate. They don't let you have enough of a range. Grid trading works best in a range. And if you don't see a range in the market you are looking at, you're not looking far enough back. In the case of my own trading, I take now the entire history of an asset. For example, my predominant trading is Euro USD. I now look at 21 years of history. That is my range. That whole market. And as we see realistically, in the last 2 months, it's only made $10. I've placed 123 trades. And yes, Cherry Blossom is my real money account with $760 on the line. This isn't an FTO. This isn't somebody else's money. This is my money. Real money. All the rest of these are demo accounts designed to do one and only one thing: help me to keep from losing my real money. This was a painful lesson that I didn't learn quick enough. And so now, before I make any changes in my real money account, I run multiple simulations. And as you can see, I have a total of 11,400 real and simulated trades. And the profits of each one based upon how that bot is set up. So I can actually test multiple techniques, multiple settings, and do so in a way where I can make an apples to apples comparison. And that really is the whole point. You have to make an apples to apples comparison. So let's do that. Let's focus only on Euro USD. Now here are all of the Euro USD trading pairs, and only those trading pairs. Again, Cherry Blossom is my real money account. All of the rest of these accounts are demo accounts, not real. So we can see $10 for roughly 2 months worth of work. The one I set up this morning, or we should say within the last 24 hours, it's already made half of that. These are the charts I demonstrated at the beginning of the video. Now, is this going to be able to keep this up? That's the point of this test. If it is, and I can actually make these changes in my live account, I will significantly grow my balance. But if it isn't, and I have to really look at how I manage my account, then I need to look at one of the other techniques. For example, the Blueberry Cobbler account is also a defensive strategy, but it has made significantly more money than my own account. But the ones that look to be most intriguing are Lemon Meringue and Strawberry Delight. They have just gone to town with more trades and profitability that is reasonably acceptable. And what's really interesting is Strawberry Delight has less trades than Lemon Meringue, but it has made slightly more profit. Different techniques, for example, different stop losses, different profit levels, different deviation levels. All of these have been tested and are being tested. I have, just within the last 3 months, 26,000 simulated trades. In the last 4 years, I have taken millions of simulated trades. That's helped me actually figure out what I did wrong and what is not being taught about grid trading. There's actually a lot. Grid trading is a technique of risk management, but it can be a very big, hot, stinking mess if you don't practice one critical component. Whatever you think your budget is, only use half of it. That's the first one. The second critical tip about grid trading that makes it successful is at some point you need to take a stop loss. Unless you have a large amount of money that you can just throw into this at very tiny positions, you have to take stop losses. If you're using a small balance, like I am, at $760, then you really need to think about your stop losses and exactly how many levels your grid is going to have. The French Vanilla account. This is a high risk account because it only has 10 levels. Blueberry Cobbler has 43 levels. I started out at 73 levels with my real money account, and I am now running 43 levels in parallel with Blueberry Cobbler because that looked safe and reliable for my risk assessment. Lemon Meringue and Strawberry Delight, they both have 73 levels. all of the demo accounts are set up to run with a starting balance of $700 per pair. I wanted to keep all of this realistic compared to what I am trading. So in other words, my real account, I started at 700. So all of these, I started using the same metrics as my real account. A way that I can migrate my test data into a live market. A way that I could actually see how my strategy was going to work as if it was a real account. And the other pairs that I track, well, those are to help me see counterbalances between market structure. In other words, when markets change, how does that affect what I might be doing? Grid trading is really the best place to start trading because you don't need to be perfect. And that's really what this is about. You don't need the perfect entry. You don't need the perfect exit. You only need to stick to a consistent level and let the machine do the rest. It's not without its risk, but it is, when done properly, less risk than other techniques. Now, if you've followed my videos extensively, then you'll know where I've talked about this on a regular basis. And I've demonstrated within my own Discord server just how these results look over the long run. And every single day I update charts in the Discord server so you can see how these experiments look. You could actually take the information and reproduce them on your own machine with your own settings, because I provide exactly what I am using. Here we are in the Jackrabbit support server, and you can see an equity chart of one of the pairs from a demo account. If you scroll back, you'll see the trades that were placed for this demo account. And you keep going a little bit further back, and you'll see exactly the configuration I used, the number of trades taken place, the profit for the month, so forth. You actually can see just how this works. Now this results area is open to Jackrabbit subscribers. So it's open, you can see it, you can visualize it, you can make informed decisions in your own trading. Let's go and find another pair, another equity curve, more trades, and you can see by looking at the market where it is going. You can see that the market started high, it dropped, and then it started climbing again, and we have a couple of trades that lost money simply by slippage. All of this information is in the support server for you to see. You can even see the settings I used and the profits I made on a monthly basis. This is the critical point of what you should take away from any trading technique. Test it yourself. Test it in a demo account and see how it can benefit you. We can keep going back through more and more trades where you can see exactly how each setting is having an impact. This is why demo testing is so important. Different settings, different profit levels, different level of trades. All of that plays together so that you get the best information possible to actually see how your trading will work out in a near real situation. So as you progress with your trading, it is important to actually focus on testing first. In all of my testing, I use live market data. And in this case, this is my live account with real money on the live market. And as you can see, my budget, real money, the amount of money I actually have at risk at the moment, and the number of positions I actually have open. This is really some of the learning that has gone into how much I have lost. The biggest thing I have realized over the 4 years of my own personal trading is that you have to look at trading, and grid trading in particular, as a passive process. That is, it has to be low risk, and it has to be in a way that doesn't even touch the entirety of your budget. You have to actually figure out every single position and how much that position is going to take before you ever start trading. When you follow videos on YouTube, look at the real world metrics they give you, and is it sustainable? Because as soon as they say a lower range or an upper range, you automatically know it is going to be a long-term failure. I can walk away from this bot and not come back for a month or for 2 months and know it's not going to blow up, because I have calculated every single position I wanted to use. I know exactly where the budget is, I know exactly where my leeway is, and I have calculated a good, reasonable approach for stop losses. That is, I have a reserve. So in the process of how the market works, through hundreds of thousands of simulated trades, I have gotten an idea of what I need. And then, because I know my risks aren't as great as what the market says, I've taken what I need for a balance and I've cut it in half. So I'm really using even less to trade with. It's a slow, meticulous process that just sits here and runs. And it doesn't even run very fast. As you saw from the information I provided, it's only made $10 in 2 months. Not very much, but it's still money made, not lost. That is the whole point of grid trading. Slow, meticulous process that over time will accumulate and grow reasonably well. Now the irony of it is this setting over the course of a 1-year period will give me a 20% return. That doesn't sound possible, but because it grows with the balance, it scales with the amount of money it earns, it is possible. It compounds on every cell. It calculates and reevaluates every time it makes a profit, so that the next position takes into account whatever its profits or losses were, appropriate to what it is doing. So it will grow and fluctuate with the market over time. And that is probably the biggest thing I learned about trading altogether. You have to be as flexible and flowing as the market if you're going to survive the market. And it's very easy to think you're not being greedy, but the market will come back and tell you you are being greedy, and you'll take large losses. The market is very resilient in that it will tell you how much profit is available, and it will tell you what your risks are in that level, as long as you just study the market itself, as long as you pay attention to price action. as long as you actually take the time to watch where the market has been and where it might go. Understanding where the market might go always depends on researching the history of the market. Now, I've talked about this multiple times. You have to study the market to be able to figure out where and how you want that market to grow. Your market has a history. It has a story. And if you listen to what it says, you can build a trading approach that will more often than not succeed very easily. For example, for me, this is the most important number that I look for in the market. How much does the market move on average on its highest time frame? That is critical because now I know how many levels I have in my grid, and this tells me what my absolute minimum number of steps needs to be to protect my budget. So this has 489 pips of movement. I have 43 levels to my grid. That means each grid has to have 11.4 pips minimum. Then you need to take in spread and volatility as a stepping stone to preparing your grid market out. If you don't do this, you will lose money. But by doing this one simple thing, simply examining the market, simply finding out how much it moves at the highest time frame, you've automatically, off the top, given yourself a 60% win rate right off the top of that very simple strategy. 60%. So from here, you can only go up more. And all it takes is a little bit of time to go on a chart, find the highest, find the lowest, and do a little bit of math. And that's what this has done. So by looking at this data, by doing this analysis, and this works on every single market, and I do mean every single market. We can see, for example, with Bitcoin, everybody's darling favorite lately. We have a history, 4 years worth of data, and we can see what the highest high is, what the lowest low is, and how much the market has actually moved in that 4-year range. Now, right off the top, we can simply take out 100 levels and see that the market should have $651 gaps. Now we know where the median is, we know where the average is, and we know roughly how to spread out our market. If we can cover this much movement on a monthly, 2-week basis here, $6,137 for every 2 weeks. If you can cover that, you've got 60% win rate right off the top. It's that simple. Bottom line, know your market. When you think you are set to go back, double check your numbers, divide it in half. Just because you think the market looks good doesn't mean the market is actually going to be good. Test first. Grid trading works on any market with the right settings. And that is the whole point. The right settings. Don't limit your thinking and don't use a fixed grid. Those are critical points to success in long-term trading with a grid bot. So let me know what you think. Let me know how your trading is with grid bots and what your experience has been. Particularly if you're using a floating grid versus the standard grid. If you've tried both of them, share your thoughts. Give this video a thumbs up and like it. Help me spread the word about just how stable grid trading can be when done right. Thank you for watching, and until next time.